Hello, everyone, and welcome to this latest weekly market recap for the week ending Friday, January 24th, 2025. I'm Tom Bowley, Chief Market Strategist here at earningsbeats.com. It's a pleasure to be with everyone again this weekend. It was an interesting week last week. We did see the S&P 500 close up at all-time highs on both Thursday and Friday. Well, actually, intraday highs on Thursday and Friday. We did pull back just a little bit on Friday at the close. But overall, pretty good week, moving up, hitting some key levels. Not quite up to those highs yet on the NASDAQ. NASDAQ still has a little bit of work to do to get to all-time highs, but not too far away there. And we're still seeing just a little bit of lagging from the small cap IWM. But all of our indices were up last week. 10 of our 11 sectors were up. So things are looking pretty good. But we do have a lot coming up in the week ahead that could have a major impact on the market. We've got a Fed meeting on Tuesday and Wednesday with that policy statement out on Wednesday at 2 p.m. Eastern. That certainly could move the market. It's widely expected that the Fed is not going to change interest rates this particular meeting. But of course, we never know what Fed Chief Powell might say after the meeting is over. And I think that's what's going to have a lot of traders on pins and needles. We'll get our first reading of Q4 GDP. That comes out this week as well. So, the Fed right now is looking at inflation and the likelihood that it could, move back up. But also, Fed's paying attention to the economy. And so the first reading of the GDP, I think, we'll get a pretty good look by the Fed as well. So anyway, we got some stuff coming up this week that's going to likely have some kind of an impact on the market. So we'll just have to watch those developments as they occur. Taking a look at the action from last week, you can see the Dow Jones Industrial Average actually led the action, gaining 2.15%, back to 44,424, with a goal trying to get back up to that 45,000 level. S&P 500 cleared 6,100. So, I was looking at the S&P 500, and there's this thing that I like to refer to as the January effect. And I was looking at the S&P 500, and right now, for the month, well, I can tell you if we could, I could switch this over to a year to date, which would be January, and you can see the S&P 500 up 3.7%. And the January effect essentially, I guess maybe to put it in perspective, there's an old Wall Street adage that says, as January goes, so goes the year. And that tends to be, there's a lot of truth in that. I've done a lot of research, and typically when the S&P 500 has a good January, the balance of the year tends to be very strong. So we're looking at an S&P so far for the month of January that's up 3.7%. And that's probably, I don't think that quite reaches the top quadrant of S&P 500 since 1950. I break it down into quadrants. So I've got the top 25% of the best Januaries on the S&P 500. Then you go to the second best quadrant, then the third, and then finally the worst quadrant of S&P 500 moves in January. And when you look at that, depending on which quadrant you fall in, that's a really good sign. I've got some great data to back it up. I think we're going to have a January effect event coming up next week. So stay tuned for that. But there are a lot of long-term signals that suggest that there's a lot of truth to the market doing well in January and then doing well the balance of the year. So got that to look forward to this week, of course, with the Fed meeting, and then we've got major earnings reports coming out as well. So you're going to be getting Apple and Microsoft and Meta, Tesla. These are market-moving stocks that certainly will have a major impact on both the S&P 500 and the NASDAQ 100. So a lot there to look forward to. We'll see how it goes, but at least for now, you can see S&P 500 so far with a pretty strong January and 1 week to go with a lot of fireworks ahead. So we'll be watching that pretty closely. I'm going to go back to this weekly update here. Okay, so I just wanted to point out all six are up. All six of the major indices that we like to follow are up. Dow Jones leading, transports the laggard for the week, but still up 1%. So pretty good action. We move on to the sectors. You'll see a lot of green again. 10 out of 11 sectors are higher, led by communication services. Internet stocks continue to power forward. That group I've talked about really likes the month of January, and this has been no exception. We've seen the internet stocks do very well. And all the way down the bottom, you can see energy not performing. I'll show you a chart on crude oil in a bit, but after a really strong run to the upside in crude oil, we basically tumbled last week, and as a result, taking energy stocks down with it. This is our industry group relative strength chart list. So what we do is we put all 104 industry groups into this chart list, but we don't use the absolute price chart. We use the relative price chart. So what we're looking at here is how specialty retailers performed relative to the S&P 500 last week, and they outperformed by 7%. This was your best industry group last week. Specialty retail. Second best, electronic equipment. If we turn the tables, flip to the other side, we got renewable energy, had another horrible week. Renewable energy has just been an absolute mess for a while now. Non-ferrous metals, aluminum, toys, and then autos. Took a break in autos. Saw Tesla coming down last week, and that sent some of the automobile stocks down as well. So anyway, here's your leadership though. Specialty retail, electronic equipment, got a REIT, industrial and office REITs there. Clothing and accessories. Clothing and accessories has been pretty strong for a while now. I think probably could go back a few months. Yeah, clothing and accessories over the last 3 months, second best performing group, outperforming the S&P 500 by 24, almost 25%. So really good action there. Let's pull up those specialty retailers here. We'll see the breakout. Just in the past few days, got a really nice breakout this past week above the high that we saw in the second week of December. And also the electronic equipment group doing the same thing, making a big breakout. So S&P 500 is breaking out, but we're also seeing some of these other groups that you can see leading the charge to the upside. So these are groups, you already got the leading industries. I always talk about getting stocks. You know, if you want to outperform the S&P 500, try to find leading stocks in leading industry groups. Well, I've just shown you two groups, industry groups that are doing really well. So zeroing in on some of the stocks within those groups makes a lot of sense to me. Let me pull up that clothing and accessories chart. Because here you can see we had made a huge move back at the end of November, early December. And then we went into this little flag, or maybe equal highs, rising lows, called an ascending triangle. Either way, very bullish pattern after an uptrend, and then we broke out of it, which is exactly what we would expect. And now we're challenging some pretty big highs from all the way back in March and April. I'll stretch this out just a little bit. Go back 3 years and take a look. And you can see we still got some overhead resistance, but we have made our way all the way back. The interesting part about this is this group tends to go in cycles, tends to go up, and then it tends to go back down, up, down, little consolidation. But if you look last 3 years, sideways, really haven't done anything in this group. So you got to look for some of the leaders here, because the leaders do have some growth, but the overall index itself really hasn't grown. And that compares to, we just pull up the S&P 500. This is what the S&P 500 has done over the last 3 years. So again, you look at clothing and accessories. Yeah, they're hot right now, but you do have to be careful, because if they don't break out, you could just see, you know, more and more sideways consolidation, maybe another big drop. So this is one of those areas of the market where I probably wouldn't be as bullish as some of the other areas where we've had a lengthier period of rising prices. Moving on, I wanted to show you the crude oil prices. So here we had the huge move over about a 3-week period, late December into the new year. Crude oil prices got up to almost $80 a barrel. Last time we hit $80 a barrel was back in August. So crude oil was doing very well. Energy was bouncing back. And then this happened last week. Actually, it's the end of the prior, or the week prior and into last week. But we came down, we hit this 20-day moving average. We'll see if this holds. But we fell from, you know, almost 80 recently down to $74 on Thursday and Friday, testing that rising 20-day moving average. So my guess is that we'll bounce, you know, that we'll bounce off of this. that energy will bounce back. But sometimes you can see some of these moves to the downside where the 20-day might hold temporarily, but it doesn't hold for long. And so I think this is a key level, though. If we can't hold $74, I think we probably have some more weakness ahead in some of the energy names. 10-year Treasury yield. This is going to be something to watch in the upcoming week because of the Fed meeting. So what is the Fed going to say? What is Fed Chief Powell got up his sleeves for this meeting? I don't know. I really don't trust this Fed much, because they're not consistent. They're not convicted to end. It was just 3 or 4 months ago, the Fed said, okay, we're changing our policy. We're now, we feel like we've done our job against inflation. Now we're going after the economy. And then 2 months later, 3 months later, everything's changed. And now he's worried again about inflation maybe picking back up. And they lowered the number of rate cuts in 2025 from 4 to 2. Which, if you're really worried about inflation, why do you cut rates 3 times in 2024 and still call for 2 more? So he's sending mixed messages, which Wall Street doesn't like. And I don't know where he's going this week. I don't think we're going to have a rate change. So I think rates will stay the same, but I think it's gonna come down to what he has to say and whether or not he changes again something. We just had the PPI and CPI reports come out for December a little over a week ago, and they came in tame. If you remember, the core PPI, it was flat. It was 0. Core CPI came in at 0.2% rise, and the expectation was 0.3. So now all of a sudden we got some better news in inflation. What's the waffling Fed going to do this time? Your guess is as good as mine. All right, let's take a look at the S&P 500. I'm going to walk you through different time frames here. So this is an hourly chart that goes back a month. And you can see nice uptrend since the 13th of January. We've had a really nice rise here. But notice the PPO's rolled over as we put in that high on Friday. So we do have a negative divergence in the short term. A lot of times these will just play out over a couple of days. I usually say like 1 to 3 days. Started moving back. If we fail to hold the 20-day moving average, I think that starts to increase the odds of a 50-hour test, which would be down 6,025, which is just a little bit more than 1% from where we are right now. No big deal, but still, short term, there's just a little bit of a warning sign out there. If we move to the daily chart, this is the breakout. PPOs come back through the center line, pointing straight up. That means that bullish momentum on a daily basis is accelerating. So that's good news. So we got a little so-so news on the hourly chart, but the good news is on the daily chart where we're breaking out to an all-time high. My number one indicator, my primary indicator is price and volume. We just broke to an all-time high. It's really hard to be bearish looking at this chart. Then we move on to the weekly chart. This one gives me a little bit of heartache because as we make our move back up here, you can see the PPO, the weekly PPO, is way below where it was recently. And you could argue that this, we haven't had any 50-week tests. In fact, we haven't had a single weekly close below the 20-week moving average since back in October of last year, or October of 2023. So about 1 year and 3 months ago. And that was at the tail end of that correction that we had. So this has been going on for quite a while, holding above that 20-week moving average. But you can see every time it seems like we move up to a new high, these negative divergences, the lower PPOs, persist. And one way to take care of that is to get a 50-week test, and that's down at 5,500. So definitely some things to at least be somewhat concerned with, right? Monthly looks good, though. Here's the problem. Even though the monthly looks good, and some might say, well, whoa, here's a negative divergence here. No, that's not the way I look at it, because here, after going up to this high, where did we go? We went all the way back down to the 50-month moving average, and we got down close to the center line. So at that point, to me, momentum is gone. There is no momentum. When I like to look at, negative divergences, it's between two highs where you have no centerline test on the PPO and you have no 50 period test in between those highs. So a lot of times it's just the 20 period that it goes down to. Anyhow, I see momentum accelerating. However, here's one issue. Any kind of a test, and we get these a lot of times when we're in these uptrends, any kind of a test of the 20-month EMA tends to be a really solid time to go long. And right now that is at 52.69, but it's rising. So we got that 50-week SMA sitting at 5,500. We've got this at 52 and change, almost 5,300 and rising. So if things were to get, little choppy, which I've been calling for in the early part of 2025, I don't know. Those are levels that potentially could come into play. All right, NASDAQ 100. Just wanted to show you equal highs here. This is on an hourly chart. Equal high, lower PPO. This one already is broken just below the 20. Looks like maybe we're going to go down and get a test of that gap support level and maybe that 50-hour moving average. On a daily chart, you can see haven't quite broken out here yet on the NASDAQ. So we got a little bit of work to do to get back up and through the high that we had established in mid-December. Small caps making a big move up here. Also, though, look at on Friday, tried to make a breakout above the January 21st intraday high up near that 230 level. Actually went just above it on Friday. But when we did so, look at this PPO, very weak. So came back down on Friday again. Key support comes in right at about 227, and that's right where that rising 50-hour SMA is. Transports hourly, just kind of going sideways. So here we actually worked our way all the way back down to the 50-hour moving average. Actually, we didn't really work our way back down much. What we did is we mostly just went sideways, and that 50-hour SMA came up and tested from underneath. So it's really the 50 coming up more than it is price action going down. And I talk about that with negative divergences a lot. It's not, you don't always see selling after negative divergences. In fact, market could keep going higher. Negative divergence is just one signal, and it's a secondary signal. But it's one to at least, take note of. And so instead of selling, that takes us down to kind of reset the PPO at the center line and to reset price action back at the 50 period moving average. Sometimes you just go sideways. And, that's really what it looks like to me in terms of what happened with transports. All right. If you're new to earnings beats, or if you've been watching for a while but maybe haven't taken the plunge, we do have a free, no-cost 30-day trial to our service. I can tell you that one of the things we do, I have a daily market report that I write Tuesday, Wednesday, Thursday, Friday, but I have a weekly, which is a little bit more of a longer term view of the market that I normally publish in the afternoon on Monday. I wrote it and published it yesterday for our members. I don't normally do that. I don't think I've ever done that before on a Saturday, but there are some clouds building out there and there's some uncertainty in the market. I'm starting to get a little bit nervous. And so please check out that weekly market report just to get a little sense before you go into next week's trading, because we got a lot on the plate coming up. We got the Fed meeting. Like I said, we got the GDP, first reading of Q4 GDP. We got some major earnings reports coming out in terms of Apple and Meta, Microsoft, Tesla. These are heavy hitters that could absolutely move the needle in the market. So some things that I'm looking for as we go into the week ahead. I think, you want to make sure and update yourself. Check out that weekly market report that was sent out on Saturday. If you just want to learn a little bit more about earnings beats, if you're fairly new, just want to kind of, find out a little bit more about who we are, you can subscribe to our free Earnings Beats Digest newsletter. So this is just I call it a newsletter, but it's really a chart that goes out twice a week, Monday and Wednesday. and 2 paragraphs with the chart. That's it. So it's not like this long newsletter. It's very quick and easy. It explains a lot of the things that we do and the way we look at the stock market, the way we look at trading, how we execute trades, our strategies, things that are really important to us. You'll see a lot about relative strength, talk about earnings gaps, which are something I like to feature quite a bit. That's one of my favorite trades is trading earnings gaps. And just all the various technical indicators that we use. So you're going to see the standard, PPO and RSI and things like that. But then trend lines, patterns, any of that stuff is all, fair game when it comes to the free charts that we put out on Monday and Wednesday. All it takes is a name and an email address. We respect your privacy. So we're not selling to any third parties. Nobody else is going to get your email. But if you want to try us out in a kind of a free way, this is the way to do it. Earnings Beats Digest. Check that out. All right, a couple more things before we wrap up. I wanted to show you over at Stock Charts how you can go, if you're just saying, okay, yeah, we've just recently set up, or we just recently hit all-time highs, right? So how can we find stocks that are also doing the same? Maybe leading the market, or maybe have been going sideways for a while and then are just now breaking out. One way you can do this, it's really simple. If you scroll down on your dashboard and right where it says your scans, if you don't see this on your dashboard, then it's probably because over here in the gears, you don't have scans and alerts checked off. So if you don't have that checked off and you start looking for the scans and alerts, you're going to be like, okay, I don't see them. Make sure you go over here, hit this gear shift, and then turn them on, and then should show up right here. Anyhow, under this More button, if you click here under scans, there's this button for predefined scans. Click that, and then you can see the very first thing, 52-week highs, new 52-week highs, 173 of them on the New York Stock Exchange. So I could hit 596, and this would bring all of them in. This adds up all of these going across the board. Or I could just go into New York Stock Exchange, which is what I'm going to do. Couple things from here. Number one, if you want to start learning how to write scans, this is a predefined scan, which I just pulled up for you, but they have this dark blue button right here, Edit Scan Criteria. So you can go in and see the actual scan that was written to come up with the 52-week highs on the New York Stock Exchange. So here it is, type equals stock, exchange equals NYSE, daily simple moving average, 20 days. This is talking about volume has got to be at least 40,000. We could change this and make this 200,000 if we want to, maybe narrow it a little bit. Daily high is greater than yesterday's daily max. And notice 253 is put on there because there's roughly 253 trading days in a year. So this is how you write 52-week high, daily high greater than yesterday's daily max, 253 comma daily high. And now you're a scan expert. But you can go back and look at all of these. Then you can run the scan. And so this takes it down to 123 because, again, I raised the volume to make sure it's more liquid. And then what I can do is save this to a chart list. So I'm going to replace chart list. I should have a scan results. Something, here we go, scan results. So I'm just going to throw them in here. Just have a chart list set up or create a new one. And now I've got all of these in a list, and I can take a look at these in candle glance. So it's just going to give me the chart, and here it's going to give me the relative strength. So I can look and see, has it been consolidating for a while? Abbott Labs has. Looks like it went up, came all the way back down, back up to the high, pulled back a little bit, breakout. Now, I don't know what happened prior, but this could be a cup handle breakout. But the volume picked up, beautiful move to the upside. And this is in the medical device area, which is one of the areas I like right now. This is a group that's broken out, looks pretty strong. Leaders in that area are stocks like Abbott breaking out, BSX, Boston Scientific, and Intuitive Surgical, ISRG. Those are three key stocks in this area. All three look really good to me. Let's see. A lot of these have just been going up, up, up. APH, this one kind of consolidated, broke out a little bit. Sideways action, now making a move. But relative strength isn't that great. See, the thing is here with ABT, you're getting a relative leader in the space and also one that consolidated for a while and just broke out. Leading stock, not so much in a leading industry group. This is a weak group, but this is a very strong stock within the group. Arista Networks just keeps moving higher. Look at that relative strength. Let's see what else we have here. Just kind of flipping just to see if anything stands out. There's BSX right there, Boston Scientific. Look at that price action. Look at the leadership. Anyhow, I just wanted to point this out, show you how you can get to it pretty quickly. Another thing you could do is maybe look to see, let me pull this back for just a second. All right, so these are all breakouts. You could actually put this in scooter order without even putting it in a chart list. And then what I would do is scroll down and look for stocks that are making breakouts but have low scooter scores. That could be, the scooter score could be low because it's been consolidating for a while. So on a relative basis, it's not really been doing much, but just made a breakout. So, you know, looking for 52-week highs and then finding these, I think also is something that could help zero in on some stocks. So let me just go down here under 80. So here's Darden Restaurants. I haven't looked at any of these, but let me pull this stock up. Yeah, beautiful move up. Came down, tested the 20-day moving average a couple times. Volume started to pick up Friday, broke out again. So that's how quickly you can just zero in on some of these. Let's see what else is down here. I'm also kind of looking at the volume too. Visa, consumer finance. See what Visa looks like. Big company. Yeah, I mean, it went sideways for quite a while. It has broken out recently, but still, it's not up that much compared to what a lot of other stocks have done. And we did just make this breakout, a pullback on Visa, maybe down in around 322, 323. Test this latest breakout and also maybe the rising 20-day moving average. That would make sense to me. So maybe not right at this level, but get a couple percent lower, it starts to make more sense. Anyhow, that's good for that. Let's take a look to wrap up the show. I just want to go through and talk about a few big earnings reports coming out this week. So we got Apple. One thing I find really interesting about Apple is that when we made this move to the upside in November and December, the AD line went right with it. There's a lot of hollow candles. Notice we went all the way back down to where this started. And look at where the AD line is, still sitting right up at the high, which tells me that a lot of the selling that's taking place here is opens, a lot of gap opens to the downside. And then you can see some hollow candles were actually off of downtrends or long tails to the downside. That means that intraday we were selling early in the day, coming back buying in the afternoon. That's what makes the AD line go higher or just hang in there while prices are going down. So I think Apple looks pretty good. I'm expecting when the report comes out, a gap up. I mean, we'll see what happens, but that's what I'm looking for. Next up, let's look at Microsoft. So AD line remains pretty strong here. Price action's just been sideways. Also some big ups, big downs, and so forth. Microsoft starting to move again. If we can get an open above about 466 after earnings, I think that would be a really big deal for Microsoft. So keep that in mind. Look for, if it gaps up, if there's strong results and we get a gap up, a gap up and open above 466 would be bullish, very bullish. Meta just making a breakout here. AD line's just so-so, not one of the stronger ones, but it is rising here over the last month as we make this breakout. So Meta, looking at relative strength, it's kind of been going down for the last few months. We'll see what happens here. I mean, I think there's some others in the internet space that are stronger than Meta. I like Netflix more. I like Google more. I think Google may come out with a nice report, but I think they're the following week. And then Tesla, look at the AD line here, has been very strong. We've seen a pullback of late, last month or so, pulled back after a huge run to the upside following the election. But you can see volume's been tailing off. The relative strength is still incredibly strong. I think we're going to get a big gap up with Tesla with earnings. Maybe I'm wrong, but I wouldn't be surprised to see this move back to its all-time high, back up above that 490 level. So something to think about as we go forward. One of my bigger questions this week is going to be not so much the earnings reports, because I think they're going to be pretty strong. They have been all season so far. But it's going to be what they do after they gap up, especially with the Fed on having its policy statement on Wednesday at 2 p.m. So there's a lot going on this week. Literally, I think there could be some fireworks in the market. If you're not already an Earnings Beats member, if you are a member, please check out what I was talking about in the weekly market report, because I am starting to shed some light on some really important stuff that could be coming up. So check that out. If you're not already an Earnings Beats member, great time to see that market report. Great time, and you can do it for free right here. So hit that green button, start your no-cost 30-day trial. We'd love to have you. After 30 days, we'll reach out to you. We're not going to just hope you forget that you signed up. We're going to reach out, make sure that you like the service, and give you options at that point to give you a sweeter deal and so forth. Annual, almost all of our members are annual members because you save almost 50% by being an annual member versus a monthly member. Anyhow, that's it for me. I really appreciate everybody tuning in. Let's see what goes on this week, what happens with the Fed. But I think we're just going to kind of be sitting on pins and needles till then. Have a great weekend, rest of it anyway, and happy trading.